I started investing in the stock market around a year ago. What did I learn? Did I make money or did I lose money? Find out in today's Shaggy's Ideas. So first of all, I started investing in the stock market on April 20th, 2020, when the pandemic started. As we all know, and in case you don't know, the stocks went down like crazy. But that's when I started investing. A little bit after that, this pandemic started in March. I started on April 20th, a month later. So was it worth it? Did I lose money? Well, I'll show you. So on April 20th, as you see on the screen, I invested a total of almost $110 on PepsiCo, Delta Airlines, a couple of Vanguard ETFs, Amazon, Microsoft, Apple, Ford. Point being, I invested a percentage of that money into these stocks. As you see, it was very minimal amounts on Pepsi, some of the ETFs, on Amazon, a little bit over $1. But the big boys were Delta Airlines and Royal Caribbean Group. So in the total of 1 year, I have accumulated 30 positions with a total of $4,736 basically. And right now, from that $4,736 investment, I have a value of $5,763.95, which is a total gain of $1,027.89. Currently, it's April 28th. So 1 year and 8 days. That's how much I went up. Do I plan on selling? Heck no. In the stock market, you make money by dividends or buying cheap and selling high, selling expensive, right? For example, I bought Delta at around $26 and now it's at $46. So I could sell each of the shares that I bought at a pretty good gain, which is around $20, hypothetically, but I'm not going to. I'm investing in the long run with almost all my stocks. This is not to say that I did not sell some positions. I did sell Royal Caribbean Group at a 100% gain. I was happy with that. I don't feel like cruise lines currently are making sense in their financials since it's much more stricter than airlines, from my understanding. Cruises are more for leisure, but airlines, to me, they're not just for leisure, nor for vacation, but for business trips. You might want to move around as the head of a company. You might need to. So what are my biggest winners right now? Ford, actually, surprisingly, is at 146% gain. If I would have put 1,000 in it, I would have had 2,500-ish. I wish I did, but heck. Interesting. American Airlines, second in line with 102% gain. Might sell that actually, because right now, I actually bought it exactly 1 year ago on April 28th. So there are some tax benefits from my understanding after owning a stock in the year or more. So I might sell it tomorrow and put it into Delta or another dividend paying stock. Delta Airlines, actually my third place with $143 gain. Not bad. Remember, the more you invest, the more you're gonna earn cash-wise. It's all about percentages here. Because as you can see, my cost basis for American Airlines was $10.59. But for Delta Airlines, I just put $185. See why the percentage is lower here, but I have more cash? That's why. We're looking at the percentages. That's the most important part. Sure, the cash is important too, but ExxonMobil went up 60%, and I still see that going higher, in my opinion. All these stocks, I'm going long term. I'm not going to go into details on all of them. You could pause the screen if you want, but these are the stocks that I invested in during this pandemic. So what did I learn after 1 year in the stock market? Things fluctuate. The stock market and the economy are not exactly the same thing. They're similar, but they're not the same. The economy might be doing horribly, but the stock market might not. Why? Because it all depends on the sentiment around the economy. For example, cruise lines might be affected horribly because of the pandemic. But people start buying because they're so cheap. And they go like, oh my gosh, it's gonna go to the moon. And people start buying and it boosts the stock price up. Even though cruise lines aren't making much money right now. So it all depends on the sentiment around there. Should people try getting into the stock market? 100%. I feel like everyone should know a little bit of investing, and everyone should. There's a lot of places we put our money in that's not really worth it and is not doing anything. Sure, I'm not saying put all your savings in there, but have some savings and invest some money too. You're not making much money saving. Of course, always have savings. I'm not a financial advisor. This is just what I think. My thoughts, my opinions, not facts. But always have something saved up and invest as well. You know, after you have a couple of months worth of savings to pay off the rent, in case of an emergency, you have zero income, you could pay off a living expense for like 3 months or something, you know? Then you start investing once you have a good foundation of savings. And of course, pay off your credit debt first, because the percentage is way higher or more continuous than anything you could earn in the stock market. But I'm in it for the long run. How much dividend did I earn during a full year of stock market? Let's see. So after 1 year in the stock market, I earned $121.48. This is 1 year and 8 days. I started investing on April 20th. Let me see if there's any activity or anything dividend wise that came recently. Put this by dividend. On day 23, I got 182. So just 121 minus that amount right there, which was 182. Around $120. A little bit under that, 119.50 around there. Pretty good after a whole year. When, remember, I didn't just invest $4,700 from the get-go. It was something that, you know, my value over time. I'd invest, 100. Look, right here I invested a couple hundred, invested a bit more, went up. Here I invested a good 500, like 300, and then I just kept it going. Slowly I kept investing more, as well as the value going up over time. So don't expect to just go all the way over here when, no, that doesn't happen that way. Little by little. I'm not rich. I can't just put like $4,000 without thinking about it. No. It's little by little. If you earn more money, you invest more money. Just make sure to invest little by little. The first deposit is always $100. After that, you could just invest more, little by little. If you guys want to start investing, by the way, which I definitely think everyone should start investing and get into it, because, just make sure that you do your own due diligence and you research companies before you start investing. You can't invest crazy. No. But if you do your research, you could see a potential gains. There's always a chance you could lose money in the stock market. So make sure to cut down on those chances of losses by doing your research. This isn't the same thing as gambling. So do your research, and I would say everyone should try it out. At least start with $100 and, try it out. Do I regret the stock market? No. Quite the opposite. I've learned quite a bit. Don't invest in things you shouldn't. The moment you see some red flags, maybe it's a good idea to leave a certain company. Like Nikola Corp. There was a lot of iffy things with her CEO actually. So there's some issues, some major red flags. You should consider dipping. It's not, hold to the moon. It could go up, but I have no regrets. I sold it at a $4 loss, so whatever. I took advantage of the tax benefits for selling it at a loss because I sold something before the year. So at a gain, which was my cruise lines. Most of these stocks are for the long run. AT&T, super heavy and bullish on AT&T, as you can see. I've invested a total of $1,114-ish. They have a good dividend. And I see potential growth with them with HBO Max, 5G, etc. I didn't even know they had HBO until I started researching them, and I dig them. Hopefully it keeps going and it keeps growing, because I want to see even more dividends from them. And that's the thing, compound interest. Those $121 that I got from dividends, I reinvested that back, because compound interest will continue to make this grow, as well as capital gains. The dividend I earn, I reinvest that, and next time I get more dividends. I learned a bunch of the stock market. Dividends is paid yearly, monthly, quarterly. Most stocks are quarterly in my experience, but something like Realty Income Corp, which is a real estate for these big companies, Sam's, Home Depot, for example. Realty Income Corp, they pay a monthly dividend, which is great. And right now I'm in positive gain from their appreciation, which is great. And if they do go down, well, dividend monthly is still going to be coming along. So that's great. Considerations you should have when entering the stock market. Don't invest money that you're not willing to lose. Do your own research. Don't be emotional with that money. If you trust in a company, then you could put your money in it. There are certain dates that you should, if you're thinking of dividend investing, there are certain dates that you should consider, like their ex-dividend date, which is basically before that date. If you buy the stock before that date, you also get the dividends for that quarter. So something to watch out for if you're interested in that. And yeah, it's very important to look at their graph. If they're going positive, for example, for example, look at this, right? I'm going to show you the 5-year chart. Look at that growth. And look at that dividends. There's dividends here too. So, and some companies grow it after a while, right? But look, this was the pandemic. Look at that drop. But look at that. In those 5 years, it was going up. If it wasn't for the pandemic, it wouldn't have gone down. And right now, it's at a good all-time high. Things to consider. Look at the charts. Even if it's, looking superficially, at least look at the charts. Look at their balance sheet. I'm nowhere near an expert in the stock market, but those are things you could consider. For example, Visa. Another one, which I also want to buy more shares of. Look at how much it cost 5 years ago. $79, and right now, $233. Imagine if you bought like $1,000 worth of Visa 5 years ago. Bitcoin isn't the only thing blowing up. So yeah, I have a link down below in the description where you could also trade in this application where I trade. There are different applications. Make sure to check them out. Make sure that they have no fees and you're good. M1 Finance doesn't offer any fees. The only disadvantage is their trading window. With M1 Finance, you can only trade at 9:30 or 10:30 a.m. They switch it up sometimes. I personally have traded in Webull myself, and Webull has a much larger trading window. And I do have some stocks in Webull. I guess I should also show you how my Webull account is doing. But recently I just used my Webull account for crypto mostly. So I do have around $300 in Webull. So I guess you could say that I have had a total of $6,000 invested. But I'll show you. Okay, I have some positions right here. I actually bought some Bitcoin in Webull. So an advantage that Webull has over M1 Finance is the fact that you could, right now, if I wanted to, I could sell my crypto. I could sell ExxonMobil. Doesn't matter the moment of the day. Not really. There's some trade windows, but it's much larger than M1 Finance. Robinhood, I believe, also works this way, but I don't know. I don't have a Robinhood account. It's a lot more advanced So you could go deep into the metrics, and it's kind of crazy, and it's a lot of information that I still don't 100% know how it works. M1 Finance to me is much more simple. I like the interface way more. But I do like Webull for when it comes to trading, and I usually use it for Bitcoin. I do have ExxonMobil here for the long term as well, but I prefer Webull for trades. I have done some small trades like AMC, very small things where I just like buy something, then I sell it at minor profits. Like, I put $5 in AMC or $10, and then, I sold it off 12, for example, little things like that. But continuously mini trades. Bitcoin, for example, a couple of months ago, or a couple of weeks ago actually, was at around 65,000. It has a small dip, so I took advantage of it. So my average price is around $55,000 in Bitcoin. I haven't put that amount, of course, but I have around $60 worth of Bitcoin. I did put like around $1 in Dogecoin just for the memes. So may the memes live on. But yeah, that's my experience in the stock market. It's actually been pretty good. I mean, as you can see, over $1,000 gains in 1 year passively if I sell right now. But income earned around $121 in dividends in a year. And remember, not all my stocks are dividends based. Most of them are, but there are some that currently don't have a dividends. For example, Delta Airlines. If they do bring it back though, I'm gonna have a juicy dividends. I believe Ford used to have one as well. So yeah, it's just things to look out for. Johnson & Johnson, Pfizer, a little bit of Procter & Gamble. I want to get it to a full share eventually, little by little. PayPal, it doesn't have a dividends as far as I understand, but I see potential growth in this, and maybe I'll sell it after 5 years, or in case I need the money or something. Definitely after the year. Altria Group, cigarettes, weed, vaping. I'm not into that stuff, but I know there's a market for that, and they have a pretty good dividends, and they seem pretty great. So little by little, you find companies that you think are worth it. You look at their balance sheet, you look at information, you search for videos online because we don't know it all, and you see different perspectives, and you invest. That's basically what I learned in the stock market. Things fluctuate. The economy and the stock market are not the same thing. They're similar. They have to do with each other, but they're not the same. It's more like the sentiment of the economy. There are trade windows depending on the app. Don't invest money that you're not willing to lose. And don't be scared of it. And don't think, oh, my opportunity is lost. You have to create opportunity. You have to find, and you start the opportunity right now. Sure, maybe we won't have gains like we had in 2020, but there are still gains always to be made, and there are losses to be made. Risk brings potential. There's always going to be risk. But what's the risk of not taking a chance? It's much higher. Opportunity cost. You're losing money. So, that's my opinion. I'm not a financial advisor. Do your own due diligence. And if you enjoyed this video, make sure to drop me one of these. It lets me know that you want more content like this. And consider subscribing for more self-improvement on anything and everything self-improvement, whether it be physical, mental, financial, spiritual, everything. And let's improve together. Click on any of the videos on the screen for more self-improvement.